It's always a good day when Warren Buffett sits down for a 1-hour interview. Only a few times a year he does a full interview, and today he did one on CNBC. I watched the entire thing, and I'm going to share with you guys the 15 main points from that interview that were brought up. He talked about Apple stock, he talked about cryptocurrencies, he talked about the markets in general. They had Charlie Munger, the vice chairman of Berkshire Hathaway, on for a bit, so it was a fun interview. Always a pleasure to watch. There's only a couple times a year they get to do it. By the way, Buffett still run that company 87 years old now, guys. 87 years old. Whoever thought a day would come when one of the biggest companies in the world is run by an 87-year-old? Like, it's crazy, guys. So the first thing we're going to talk about is he put in 2 vice chairmen, okay? Why this is a big deal, 2 vice chairmen, is it kind of sets up the succession plan, okay? This kind of sets up a succession plan for whenever he steps down from Berkshire Hathaway. They're in a better position now that he has 2 vice chairmen. Before, they only had 1 vice chairman, Charlie Munger. Charlie Munger's 94 years old, so that doesn't really set you up in a succession plan at all. But in this situation now with 2 much younger ones, I think one's in their late 50s and one's around 64, 66 years old, they're in a much better position for succession now at this point, having those 2 vice chairmen. The second thing was, he said he's in remarkably good health, which is, I mean, he's still just as wise as he always was as far as, you know, talking and kind of being there. And you know, when like people get in their 80s, a lot of times you can like tell they're like declining mentally, and like their speech is starting to slow, and they're kind of losing their train of thought and things like that. Like, he's still just as sharp as when I got into the markets in 2008, 2009, and I had watched Warren Buffett interviews. He's still just as sharp as then as far as being with it and being able to stay on topic and all those type of things. The third thing is, they asked him like how long he plans on still being CEO of Berkshire. He said 10 years would be a long time, because somebody, the woman, Becky Quick, who was interviewing him, asked him, you know, like, 10 years? Is that something? He's like, that would be a long time, but he sounds like 5 years is more realistic, which would put him still being CEO. 5 years from now, if he's still CEO, that would mean he'd be a 92-year-old CEO, which is way up there. We shall see. So that kind of covers like the succession plans and whatnot there, and kind of how long he plans on being there. The fourth thing they talk about is he did not say the markets are overvalued. He did not say they're undervalued. But if I kind of like read between the lines, I've watched so many Warren Buffett interviews over the past decade, it's ridiculous. If I was kind of reading between the lines, his tone of voice sounded more like we're more toward overvalued than undervalued. Let's just put it that way, because I've watched interviews where, you know, you can tell he's like, oh, you know, I'm buying everything right now. It's so undervalued. There's been times where, you know, I just feel like he's in a fair market value. Right now, I just kind of feel like he's kind of like more toward overvalued than undervalued. Let's just put it that way. But he did not say we're overvalued in the markets. At the same time, he didn't say we're undervalued. It just sounds like we're somewhere in the middle, just toward the higher end of the range. Fifth thing they kind of talked about is he said that tax reform is a big deal for Berkshire Hathaway. You know, so basically what kind of his example he was giving was, you know, let's say Berkshire Hathaway buys, you know, a company, okay? They only got 65% of the profits before in that company, whereas now they're getting 79% of the profits. So he says that's a massive deal, not just for Berkshire Hathaway, but for all big companies and all owners of big companies out there, which if you're a stockholder, you're basically an owner of the company, right? Says that's a really big deal when you go from owning, you know, 65% of the profits to now with tax reform, only a 21% corporate tax rate, to now owning, you know, 79% of the profits. That's a massive change there. So that was the fifth thing he talked about. The sixth thing they talked about is they asked him kind of, you know, are you a net buyer? He said, yes, I am a net buyer. I've been a buyer of stocks under 15 of the 45 presidents, which is crazy. 15 of the 45 presidents he's been buying stocks under now. He says he's just as big of a buyer as always, as far as being a net buyer in stocks. Seventh thing they talked about is it sounds like he's still trying to sell that massive IBM stake and still trying to sell all those shares off. He didn't give a specific, yes, we're selling right now or whatnot, or we stopped selling or we're holding for now, but it sounded more like he is trying to still get out of that IBM stake and trying to exit that position. And when you have a position as big as they have, you know, in some of these huge companies like they built up with IBM, it's really hard to get out of those positions in a quick amount of time unless you're just want to crash a stock or something like that completely. You have to kind of exit, you know, a few 100,000 or a few million shares a day, you know, each trading day or whatnot, to kind of get out of that stock in a way that doesn't completely devastate the stock. So that's what they're trying to do there, it sounds like. Number 8, he says with Bitcoin, talked about Bitcoin, he talked about cryptocurrencies in general. His position kind of sounds like mine a bit. He says with almost certainty, they're going to have a very, very bad ending. That was kind of his words. With almost certainty, they're going to have a very, very bad ending. He says if he could buy 5-year puts on every single cryptocurrency in the world, he would. 5-year put meaning basically you're betting against a stock that would go down to a certain price within a 5-year span. Now, 5-year puts obviously aren't something you can generally buy out there. Like the longest put options and call options you can generally buy are just over 2 years sometimes. So you can't really do that. But he says he would absolutely do it in every single cryptocurrency. He's convinced that's going to end very, very badly. Number 10, he said that he would not short cryptocurrencies if he could, because of they could keep rising in the short term. They could keep going up massively, and you could get absolutely destroyed by shorting them like that. Something that's a high volatility type asset, right? If you short it and it just keeps going up, it goes up another few 100%, or let's say another 1,000% or whatever, you can get absolutely destroyed, which is why you'd want to buy a put, because in a put option scenario, which by the way, I have an options course down there if you want to learn about options. But when you buy options, right, you're limiting yourself to 100% loss. You could lose 100% of your money if you buy a call or a put option, and it doesn't do what you need it to do. You lose 100%. When you short a position, your loss is unlimited. If that thing just keeps going up and keeps going up, your loss is unlimited. And on top of that, obviously you have to pay interest on that money, so you get massively screwed. Which is why if I'm ever negative on a company, if I'm ever negative, I never short shares. I never short shares. What I do is I buy put options on that particular company, generally a year to 2 years out on that particular company. So, by the way, options course, link down there if you want to learn about that. Number 11 was, he says, he didn't say, he actually showed it. Even though he owns a massive amount of Apple stock, he's actually a Samsung fanboy. He still has a Samsung flip phone. Can you believe this? I didn't even know people still had flip phones in this day and age. He actually showed it off and whatnot. A Samsung flip phone from like who knows how many years ago. He still actually has one of those, guys. That's freaking crazy. He says Tim Cook sends him a Christmas card every single Christmas, tries to convince him to buy an iPhone, but he still hasn't done it yet. Number 12, he said that GE, talked about GE stock, they talked about that one for a bit. He said it does have value at some point, but it doesn't sound like he's buying the stock right now, and he's basically kind of has a position on similar to me as far as stocks go. Like, even if you see something that's maybe a decent deal, maybe something else out there that's way better deal, so you can only put your money towards so many things out there. So he said it has value at some point, he says, but it doesn't sound like he's buying it. Let's just put it that way. Number 13, he doesn't have any big acquisitions set up, but he would like to, because I think he has something like $80 billion sitting around just for acquisitions. And, Becky Quick asked him if he's got anything. He said no, but he says he would like to. So it doesn't sound like they'll be buying anything huge in any short amount of time here. Number 14, when they had Charlie Munger on, he said they asked him if he sees any bubbles out there. And he's, by the way, he's like Warren Buffett's right-hand man, right? So he says he sees kind of two bubbles out there as far as right now. He says one is in the private equity market, which I would actually agree with this. There are a lot of bubbles in the private equity market. Basically meaning, let's say I got a massive fund of money that I've grouped from investors and whatnot. I could go, to a private company like an Uber or somebody like that, or an Airbnb or whatever, right? And I can say, hey, we're going to give you an extra amount of money. We want more ownership in that company, and that pushes up the valuation even higher and higher. So what he says, there's a lot of bubbles in private equity. I would agree with that. He says he agrees with Warren Buffett as far as like a cryptocurrency is a huge bubble going on right now. That's not going to end well for anybody. Number 15, he says, Munger says professional economists basically don't know what the hell they're talking about. And Warren Buffett pretty much agrees. They kind of talked about, if you listen to professional economists, right, a lot of times they'll tell you this or that or this or that, and many times you're never going to make money taking their advice. And he says they don't know what the hell they're talking about most of the time, and Buffett agreed with that. So anyways, that pretty much covers the whole entire interview. I try to look for it on YouTube. I can't see it on YouTube yet as far as the full interviews. There's a few like highlights of the interviews and whatnot. If you go to CNBC app, you can actually watch the whole thing if you want to watch it in depth. But basically, those are the 15 biggest points. Everything else was just kind of a lot of like BS talking, I like to call it, or kind of talking about those points more in depth and things like that. So anyways, hope you guys enjoyed. Hit the thumbs up if you did, and thank you for watching, guys, and have a great day.